Good evening, all. This is Shea Horowitz, ShogunTrading.com. This is our free weekly newsletter. I want to talk a little bit about this past month and the upcoming month. October brought on one of the strangest markets I've ever seen. Here's what I want to show you. This is S&P 500, the major index, of course. And the indicator that I have below is called the average true range. It basically takes the ranges of every day, the high versus the low, and averages them out. What I want to show you is how large the days have been. The level we were actually at is around the 76, and I have data over here going back. See 30. You can see that the numbers right over here. Just watch this area right over here, and you can see how high the numbers get. 19, 17, 16, 14, 15, 12, 13, 15, 19, 20, 32, 32, 30, 32, 40. There's 42. 42. This was in April of 2000. And that's about where they settled. And right now, you can see we are over 70. So the most we really saw was April of 2000. Remember the bull market of 2000, the market crash and everything along those lines. And you can see we're almost doubled that in the range that we have. And it's not because of price, because the price of the S&P 500 was actually, let me put this chart on a monthly basis so you can see it. The April of 2000, we were at 1500. So the price was actually higher than it is today. But you can see the kind of volatility we have on a daily basis. Of course, the volatility chart right now, the average true range right now is different because this is a monthly chart instead of a daily chart. Now, the point I'm trying to make over here is that this has been a very dangerous, very indecisive, very worried kind of market. I would be a fool to think that this kind of dive right before November 4th has nothing to do with the elections. I don't want to make any kind of political statement by interpreting this, but you can see what the market does. This has been a very scared market, an extremely disappointed market, I think, an extremely risk averse. People are trying to reduce their risk. I think people are frozen. I think businesses are frozen. I think people don't want to spend money right now. I think people are depressed. People are shying away. And that is not a good thing for the market. I am really hoping that after November 4th, regardless of who wins, I'm sure you can tell who I'm rooting for. But regardless of who wins, I just want action. I want people to be confident. I want people to go out and spend again. I want people to go out and do business again. I want people to go out and invest again and just go out there and relax. That will settle down the market. And when the market is settled down, that's when we're going to be able to see some serious moves again. October has been an enormous month for us at Shogun Trading. We had serious profits going into the beginning of October. We were basically short across the board going into October. We shied away from trading during this noise. We got stopped out a few times. But the profits we made on the first week of October was tremendous. We are now starting to play a little bit on the long side, just for the short term, because there's quite a few stocks out there that look like they want to bounce off the bottom, just like the S&P 500 is bouncing. We did try to go on the short side for a little bit. We made some money on the short side. We had a little bit of fun on the short side, but the short side stopped right at support, and now, of course, we reversed, and we are going up with it. Now, what's the market going to do right now? Let me take the average true range out. You can see a definite bottom or an attempt at a bottom. And there's your wedge-shaped consolidation. You're always going to find that trends start with consolidation. And there's going to be a first wave up, which is what we're experiencing right now. There's going to be a little bit of a pullback, and then there's going to be a higher bottom. That's what I'm looking for. I'm looking for the higher bottom. Once I get that higher bottom, we can start reversing it to the long side. I have a feeling we're going to get quite a bit of rebound. Remember that people always buy on rumor and they sell on news. They sell on rumor and buy back. They sell short on rumor and they buy back on news. The market is always an anticipating animal. If you think, for example, that a company is going to come out with incredible earnings, you're going to buy ahead of it in expectation that the company is going to come out with positive earnings. Once the positive earnings come out, there's no reason for you to hold it anymore because the event that you were looking for happened, and therefore you sell. And it's the same thing happens on the short side. If you expect some kind of a disaster, you short ahead of time. You go short ahead of time. Once a disaster happens, you cover. What I think is going to happen right now, I think we're going to see quite a bit of short covering. And short covering is because, first of all, the disaster is not going to be as bad as people think. If we're talking about economy, we're talking about politics, whatever. The economy is not as bad as people think. All of a sudden, they overblown their fears. And it's not because it's not bad. It's just not as bad as people think. When the analysts come out with earnings estimates and so on, they are overblowing it. And then when earnings actually come out, the result is positive. It's a positive surprise. It's hooray, great. Even though it was just based on expectations. So remember that the market is always trading based on expectations, always trading ahead of time. That's what I'm looking for. I'm looking for a short covering rally. I'm looking for a short covering rise back up, a trend back up after the election's over. The trend is overwhelming on the short side. I mean, if you look at the moving averages, the yellow, which is a 21-day, the blue, which is a 50-day, and the red, which is a 200-day, the distance between them is enormous. And that's how you really know the strength of a trend, by the way, is the distance between these moving averages. You can see when a trend is not very strong, you can see that the distance is not that far. But on that, now, to me, this looks like a stretched rubber band. And the stretched rubber band is going to snap back. Now, it's going to snap back, but then it's going to fall back down, in my opinion. Just because it's just a rubber band. In order for us to really start trending back up, we really need to form a nice bottom, let these moving averages start to converge a little bit. Once they start converging, once you see them starting to converge, and then start flipping back, that's when you're going to start seeing an uptrend. And we're looking forward to that as well. My plan for this week, I think Monday and Tuesday are going to be a little weird, especially with elections. I think Wednesday is going to be a reaction day. Don't be surprised if you see a huge rally on Wednesday. First of all, because the market is going to get certainty. The market loves certainty. It loves to know what's going on. After that, I think we're going to consolidate for a little bit, and then I think we're going to start moving up. I am looking at longs right now. I'm looking to go on the long side. I'm looking to buy stocks off the bottom. Stocks that are making bottom patterns after a very, very strong downtrend. Those stocks that are down 60, 80% and are starting to make higher bottoms, that's the stocks that I'm picking right now. And so far, they've been doing really well for us. Friday was a pretty big day for us. Most of the stocks we picked made between 4 and 5%, 4 and 6%, which is not too bad at all. Anyway, don't forget to go out and vote. Your vote is your right and it's your duty. And, whoever wins, wins. I think it's beyond our individual control at this point. Let's have fun. Let's go ahead and take advantage of the market and go from there. Have a great week, and I will talk to you next week. Take care.